Welcome back to Bond SCX. This is week 5, January 31st to February 4th. This is Lance, the bargain stock bounty hunter, back at you again with another video to talk about some good plays of the week. Start over with a disclaimer. I am not a financial advisor, nor am I advising anyone to spend their money. This is only for educational purposes and only my opinion. Any money spent is at the individual's own discretion and not due to any information from me. So before we get started, I want to start off talking about the Nasdaq and that New York Stock Exchange. Very similar to what I did last week. I'll start off at the charts here and looking at the Nasdaq. So coming into the week, we could see that the Nasdaq was starting to fall. One of the things I pulled out was a support level here at 13,069.91. You can see how it came very close to touching that line, that support level, and bounced back, pulled back up, which is a good sign. Then you also saw around Thursday and Friday, a little bit of a pullback down and a pullback here. So what I projected happened, but what I see happening is another possible return back to this line support. Hopefully that support back down, if it does come down, does pull back like we saw here and give us another return back into a better area. So zooming out a little bit, what I wanted to show was, as I mentioned last week, we've got the support. If it doesn't hold support here coming into this week, look for it to potentially fall down to this next level of 12,601. So currently we're in a 15% to 16% drop. Okay. So if we go out and we fall again, we'll be in the brink of a crash, right? A crash is going to be anywhere in the 20% above range. So that's what you're looking at, about 19.6%. If it doesn't hold support here, look at about a 19.6% range. And at that point, it would be considered pretty much almost a crash at that point. Doesn't hold support there, yes, it's going to be we'll be definitely in crash zone. So this week, I'm looking forward to the market, again, touching back down here, showing some support. Still a lot of earnings calls coming up this week, and then coming back up, hopefully, into the next week. So I'm looking best case, the week of the 11th, coming back and turn back into a more of a bullish pattern if we can hold support here. Very similar, the New York Stock Exchange this week. And again, you'll see what stocks companies trade on up here. Once I go into the companies, you'll see that up there on the right. All right, so New York Stock Exchange, very similar. You're looking at a lot of support coming in last week. The 16,000 mark here is what I want to show. So you'll see there's a lot of support here, which is a good sign. So I'm going to annotate here. I'm going to show why that's a good sign here, right? So this range here, this range here, 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 and here, right? So it's very, very, very solid support there. If it doesn't hold support there, your next level of support is going to be around here. And if it doesn't hold support there, it's going to be down here. So you're looking at a very clear set of support here. And again, if it doesn't hold support here this week at the 16,000 range, right here at the 16,000 range, then you're looking at support to fall back down to the 15,000 for the New York Stock Exchange, which is still in good territory. See, that's about a New York Stock Exchange. You're looking at about a 11.5% drop. If it falls to that range, the next support level be a 14, almost 15% drop, and it's out of the cake range. So you're looking at a deep drop, and again, you're looking at a market crash at that point. This week, we expect it to come back up some. We'll see. Here's its true value here for the New York Stock Exchange. That's where it wants to be. The values here. We'll see if everyone who's investing below here in the stock exchange see that value and pull it back up. Again, it's across the SMA, which is always a very, very telltale sign that things are going to continue down. We need to see it come back and cross back up in the up direction. All right, so going back into the plays of the week for this week, Ericsson. So Ericsson popped up as a great play for this week as a day trade. And so looking at Ericsson, its true value is $11.48. Its current price is $12.07. And it's showing 59 cents above value right now. Trending at a pretty good movement up at a 2. And it's definitely in the cake as it highlights here at $12.07. So let's look at Ericsson, see what I'm seeing with Ericsson this week. So with Ericsson, always looking out a year and 1 day. And you see Ericsson has been really high going back into the February through June, July timeframe. You see a sharp drop off. It's been dropped off pretty much, kind of been in this little bit of a wave pattern going down since pretty much August timeframe, right? But one of the things you'll see, and one thing that's pretty consistent here, so we've got some earnings calls here, here, and here. This earnings call here, you see the market pull down for the stock. And you see here, there's another market earnings call in the market, pulled up for it and then pulled down the next day. One thing I have here is a resistance line that I'm seeing. You can see if this earnings call hits this resistance line, there's a touch there. In between the two earnings calls, there's another touch on this resistance line. On this earnings call, there's a touch on the resistance line. And what did we just have for Ericsson? Had another earnings call. What happened on this earnings call is it pushed above the SMA. Let me scan back out just a little bit here. Pushed above the SMA in a bullish pattern. Will it touch this resistance line again? Right? It's done it before. 1, 2, 3. Will it be a 4? Right? So one of the things I pulled out for this one, reason why I pulled this one out is because I am seeing, an uptick here in the MACD, which happened here, push above the SMA. What I'm hoping for is it pushes into, touches this resistance line at least. The only thing to be a little bit wary of on this one is it topped out on the MACD and is it going to come down? So you see see the kind of top of the MACD here, and you see it's almost there now. Just went from like almost a fake out down to pull back up. It's going to come back down. Don't know, right? So one of the things I would look at this one and see that I like is there's looks like it could be a support coming here. And so for me with Ericsson this week, I would be comfortable buying Ericsson at the support here. I got a nice pull back down here, jump up here on the earnings call day, and then stayed strong after that. I would say with Ericsson, I'd be willing to purchase Ericsson at $11.67. So with Ericsson, that's where I'm going this week, $11.67. All right, next on the list, this week is JD.com. So JD.com pulled up on the scan this week. JD.com is a e-commerce company. And so their true value is $71.24. The current price is $69.34. So they're showing $1.90 on sale, a trend of a 2. So let's look at JD.com and see what pulled out in the charts that I liked. So again, looking out 1 year, 1 day. And JD.com has been a lot below the cake here, right? You look back into the May, September, October timeframe. See this SMA come up into the cake range, come down. So it tends to want to hang out here, right, and below the cake. But what we see here is a few nice opportunity signs here that says, no, it can come above the cake. I don't think it'll come above the cake this week, obviously. I'm just looking at how the movement and the pattern of the stock's been traded. So looking at a support line here, I'm starting to seeing an SMA here, looking for a potential cross of those two, which take it back into a strong bullish pattern and possibly in this range. Looking at that cross take place somewhere in mid-March. Looking at this week, the opportunities that presents itself. Just a little bit. You see that the pattern is starting to come together, almost like, again, like in a bundle. See how the EMAs are kind of crossing, and it's like it might cross back, almost coming into a flat pattern, although it's coming in the week as a 2. It looks like it may be going a little flat. But you also look at the MACD, see almost of a little bit of turn down here. And so with what I'm seeing with how the stock has been traded, one thing I want to point out is you're looking at some days here in 1 day, right? The stock is very rangy. Stock price goes 8% in 1 day, right? 8% in a bullish pattern this day, goes 8%, 7%, almost 8% in a bearish pattern this day. Look at a 8% to 9% bullish pattern that day, all in 1 day, right? Pretty impressive. And another 6, 7, 8% in this day, right? A bearish pattern. See another one here, 7% in 1 day in a bearish pattern, right? So you see it's 7, 8%, 7, 8%, 7, 8%, 7, 8%, right? So looking at that pattern, looking at the supports, definitely see a possibility for this one to come back down to 65.15. And maybe have another rangy day this week in the bullish direction that could at least get you back up, get the price back up to 71.26 at the very least. So you're looking at another rangy day, 9%, or rangy week sometime this week. So you're looking at a potential of getting in pretty low at 65.28 is where I'm going with JD.com this week. Again, something I'm seeing with the stock that's pretty interesting that I'm definitely going to be looking forward to jump in. So JD.com for me, looking at $65. Off real quick. So JD.com, I'm looking at 65.12. So 65.12 is where I'm going with JD.com this week. $65.12. Again, this stock looks like it has a pretty good pattern, and definitely want to try to get it in this range, hold it till it goes up this week. So pretty good stock to trade. All right. Next one on the list, General Electric. So General Electric, true value is $94.18. Current price, $92.10. Coming in at a $2.08 price on sale, and moving at a flat trend. So I want to show you what I'm looking at with GE, General Electric, this week. You're always looking at a 1 year, 1 day. Very, very, very consistent pattern here. Really nice what I'm seeing here. You see how it's been above the SMA for quite a while. Actually merges with the SMA really strong. They actually crossed SMA really strong back in September and pulled back up above the SMA in an all-time, well, not all-time high, but a high of the week, of the year at 116.17. Then you see a strong pullback down, right? And so as I get into, as we get into December, right here in December, falls below the cake, back up, falls further below the cake, further back up. Then you see another fall and a support here, right? So of course, a lot of this is due to market volatility, of course. GE trades on the New York Stock Exchange, as we just looked at. And so as the New York Stock Exchange pulls back up, if it does this week, or touches back down, we want to get into GE around that possible fall back down. And so you see the support here, see the true value here. And so the opportunities that will present itself to us this week, if it does touch back down on the New York Stock Exchange, see the same support levels here. We want to get in at GE, this 88.21, before pull up by Friday to at least this range, which is 94.51. So if you get in here, you're looking at a 7% return this week. So that's what I'm looking at for GE. Also scanning back out just a little bit. See the SMA starting to come down a little bit. We want to see this cross to get back in a strong bullish pattern. So we're seeing that possibly in the early March timeframe if it falls along this pattern that I've got projected here. So looking at GE this week, I like it at 88.21. Mark that down. 88.21. All right. And then last but not least for this week, we got Verizon pulled out this week as a good day trade. So looking at the true value, it's $50.48. Current price is $52.90. So it's 42 cents above value, which is not too bad. We want to always wait and see that it comes down below value, which I like to do, and then make my move to purchase at that point. It is going down in a negative trend of a -2. It is in a cake at 52.90. So although it's going down in a trend of a -2, I pulled this one out and I'm going to show you why. Things I liked in the chart, I definitely want to take an opportunity to jump into. So Verizon is a very heavily traded stock. Look at the volume here. There's a lot of volume in the stock. Constantly day to day, we're looking at 40 million shares here, 39 million shares here, 14 million shares here, probably averaging around the 20 million shares a day. So a lot of shares coming in the stock. It's got a pretty open, wide cake range. Let's see how wide it is here. A lot of opportunity for this stock to stay in this price range between $57 and around $52, right? So this is where the price stays. This is where it wants to be. So looking at the SMA, again, as a trend line, see the SMA pulling down, and you see actually just trying to bust through the SMA. They got rejected. So we see here, here recently, early part of January, a knock at the door of the SMA, just knock, knock, got rejected, right? Didn't open the door to the SMA. Then you see support levels here. You can see those support levels starting to pull back up. So this is what we call a convergence of the price. So the price is coming to a point here, price is coming to a point here. So everything's coming to like a center point to a wedge. That's what I'm looking for. Looking at that wedge to make that cross at some point, looks like around the April timeframe. That's going to take it back up. We hope, right? Had a knock here, didn't cross. Knocks here and doesn't cross. You're looking at a return back down into the $49 range. Right? And so what I'm looking at here that kind of took my attention was this EMA comes down. You see a lot of rangy prices here again. Go over that here in a second. So see this EMA come down, kind of turn back up. And so one of the things I'm looking at on this one is there's some days where the price is very rangy. So we're looking at a day here, price moves about 4% in one day in a bullish pattern. Day here, price moves 3.76%, which is almost 4%. A bearish pattern. And we saw just on Friday, stock price moved 3% in a bullish pattern. So pretty rangy days here, and you can kind of see the price action moving in the way you want. You can see the support starting to pull back up. Again, this one trades on the New York Stock Exchange. So you're going to follow that index to make sure the index is not falling before you decide to buy into the stock. So looking at it a little bit closer, see the MACD's down. So what I'd like to see in this one this week is an opportunity to get back in at a price of $50.89, $50.88 in that range. Again, as the market, if the market does pull back as I think it will, some this week at the support level, you'll see it kind of look very similar to where the market came down in the New York Stock Exchange for the support level. Comes down to here, you're looking at an opportunity to get in at $50.89, an opportunity to get by Friday, get back to the 52.47 price range. Some other things I like with Verizon, has the potential to even get back into the $54 range if it goes really bullish this week. But I'm banking on at least 3%, 52.47 this week, or at least $52.03 or $52 even, to about a 2.2% gain. So a great opportunity looks like coming up. Again, how the market reacts to some things coming out. There's a lot of companies doing earning calls this week. I believe there's a job report coming out this week. And so be aware of how those things affect the market. I definitely think the market is not in a very, very stable pattern just yet. So just be advised that those things can still happen to where the market turns back down. Things can get worse before they get better. But always be aware of that before going into the market. And that's what I'm going to do this week. So stay tuned for some more videos from Bond SCX. That's all for me this week, and have a good week trading. See you soon.